Bitcoin sentiment has always ebbed and flowed, right? So people get really excited about it when it's going up, and then they lose that conviction when it's going down. But it's still the same asset. You know, Bitcoin isn't volatile. It's people who are volatile in reaction to Bitcoin.
Welcome everybody, I'm here with the management team of the London Stock Exchange's newest listed company, the Smarter Web Company. Gentlemen, thank you very much for joining me. First of all, Andrew Webley, CEO, Jesse Myers, Head of Bitcoin Strategy. Gents, it's been a very intense ride, let's say. That 10 months has seen you go from being worth £20 million market cap to £1 billion, and then back to where we sit today at 150-ish. How has that sort of emotional roller coaster affected the way that you can act? And obviously the flywheel situation, it was just perfect at 4 times, 3 times, 2 times. But as you get down to 1 times MNAV, how does your strategy change?
Well, so it depends how you think about things. So there's a couple of different parts to that question. So, you know, if we look at the peak of our share price, which was July 2025, since then, in a decreasing share price, we've increased our Bitcoin per share by approximately 50%, and we've approximately doubled our overall Bitcoin stack. So the 2 most important metrics are probably, firstly, Bitcoin per share, and then secondly, the overall Bitcoin stack, because that's what gives you size. So in the future, we can do other things. So Bitcoin per share, most important for shareholders, for the company, then overall Bitcoin stack. So in a decreasing share price, we've still made progress. So yes, the fiat share price is down considerably, but the Bitcoin per share is up considerably. So that's the first thing there. And then the second thing is to think that what is the model? So clearly, you know, in a very high sentiment market, there's things that you can do, but you need a business that can work in all scenarios. Mm-hmm. So our business works in a good market, a flat market, a bad market. There's different things that you can do in different scenarios, so you can still create a return. There's other complications though, because up until, you know, very, very recently, we've been in the LSE listing process. So there's been certain things that we haven't been able to do it, yeah, which we would have potentially done otherwise. So there's tools in our toolbox that were, let's say, locked, you know, for example, in November and December, because we were in the final stages of then telling people about the prospectus, which at the time we couldn't even tell them that we couldn't tell them that because of that. And then the other thing to overlay onto that is, you know, how you communicate with people. So, you know, we can't control the Bitcoin price. We can't control our share price. We can control what we do as a business, what decisions we make. We can control the information that we tell our shareholders, and we can show up in the good times, the bad times, you know, all the time. So
you say you can't control the Bitcoin price. To what degree, Jesse, do you think that Strategy's purchases of Bitcoin and all the other companies that were getting onto the train at the same time, it was affecting the Bitcoin share price? And now that support's gone because you're not at 2 times MNAV anymore. They're all trading around 1. There's not the demand for Bitcoin that there was.
You could view it that way. I think it's important for people to remember about Bitcoin that there's a fixed amount of Bitcoin. There will only ever be 21 million whole coins divisible, but and that's based on a mining schedule where the amount of new Bitcoin being mined every day gets cut in half every 4 years, and that's permanent. And so there's no amount of increase of price that can cause there to be more new supply created, which is, you know, true of gold or silver. As the price goes up, then, you know, they will mine more because it becomes economic to do so. And if you look at the mining flows, you know, how much Bitcoin has been mined in the first month of the year, and then how much Bitcoin did Strategy buy in the first month of this year. Strategy alone, one entity, bought 4 times more Bitcoin than was created. in the first month of this year.
Okay.
So, that's what I think about and focus on, because if that continues, and I think it will, then there's only one direction for the price of Bitcoin to eventually go. The reason the price has been going down, despite that imbalance, is because some holders are selling, right? Some long-term holders, especially people who bought in the early days or who are in high profits, have been selling. But there's a finite amount of that. And so long as...
But why have they been selling then? If that completely goes against you guys' vision that Bitcoin is going to 1 million, let's say, to pick a round number, why are they selling at 100,000?
Well, if you think about a lot of these, half of the supply was released in the first 4 years when the price of Bitcoin was, call it $1, right? And for those guys who got in very early, they're sitting on immense fortunes. In the last couple of years, one of them went to space, one of them's building their own personal space station, and then who knows about all the other ones who are quite private. And I think the reality is they're selling to lock in their wealth and transfer out of this asset into other assets. And then on top of that, there's a narrative of the 4-year cycle, right? And that's been how Bitcoin has traded for its 16-year history because of the halvings. It seems to line up where there's a halving, and then over the next 18 months, a halving of new supply issuance. And then over the next 18 months, there's a bull market, and then a bear market after that. And so that has become self-fulfilling because people expect that to happen again.
But that's all it is. It's bullshit, really, isn't it? That just because there's been 3 occurrences in 3 occasions doesn't mean that a 4th time it's going to follow the same.
Correct. And yet I think it's an important narrative that some of the early holders have lived and died by for so long, and it has worked for so long that the timing of that would have been October of last year would have been, quote unquote, the expected peak. And then it's been a little self-fulfilling where that has kind of been the local top. But we can talk about looking forward how the macro setup for Bitcoin is great. And I think that the fact that 2025 was a not great year for Bitcoin sentiment overall, kind of started with high expectations and ended with expectations of continued downside. That kind of pattern has played out historically for Bitcoin in its bear markets, right? Where that if you have a bad year or a disappointing year, that tends to be followed by some very good years, where maybe you start out with expectations of not much, and in fact a lot of fear at bottoms or local bottoms, and then the next few years tend to be very good. So we might find ourselves there now.
But previously you haven't had gold and even silver as a competitor, right, Andrew? It's been the crypto crowd have wanted to buy Bitcoin. Now they've been let down by it in the past 12 months, and suddenly have they found a new thing to believe in?
I'm not sure whether it's necessarily the crypto crowd, and I think we need to give gold and silver a bit of a break. Yes, they've had a good year or so, but they haven't exactly performed for decades. If we look at Bitcoin for almost 2 decades, it's performed pretty well. Clearly the best performing asset in the world ever. So if there's one bad year every now and then, which was a negative 6% year, it's not that bad.
It's turning into a pretty bad January and February, though.
Yeah, but it's all about timescales, and that's why I say to people that I've got no idea what Bitcoin's going to do this afternoon, tomorrow, up, down, or unchanged. It's obviously going to do one of those things, but which one of those things I don't know. I have 100% conviction that over a medium to long term time period, Bitcoin's going to go up, and then it's going to keep going up and then go up some more. So, of course that might be wrong, but over a reasonable time period, I remember when I first started working in financial services, I think they said that every investment should be bought for 6 years, from memory, and a lot of the time people think that you can invest for 3 months, it's a trade. So I think Bitcoin's doing absolutely fine, and you need the volatility.
Well, it's not doing fine though, is it? Because price movements create demand.
Yes.
And you must be absolutely dying to get your hands on funds to buy the cheap Bitcoin. Well,
you've identified the thing that not everyone realizes with the model. So a lot of people think that a low Bitcoin price is good for a Bitcoin Treasury company, when, really a flat or a slightly increasing Bitcoin price is probably better. So, the reason why, a terrible Bitcoin price is not good for a Bitcoin Treasury company is because it's also about the availability of capital and the confidence. So that's why you need an asset that is becoming more and more popular. So I personally think that right now, where we're seeing at the moment, is the ideal time, because from a company point of view, we've got the London Stock Exchange listing, and we've got a lot of other, sort of shorter term catalysts, I believe. And then from an external point of view, we've potentially got a Bitcoin price that's, I believe, over the worst of it, which will then bring stuff back in. And then, how high do we go? We'll have to wait and see.
I think your MNAV hit 0.7 at one point over the Christmas and New Year time. Jesse, did you start to think the model was broken?
No, I think, it's very important for everyone to understand about the Bitcoin Treasury model, that volatility is vitality, as a popular phrase in the space. It's very true. In traditional markets, volatility is viewed as a bad thing, because volatile days tend to be downside days with bonds and equities. But with Bitcoin, it's the opposite. With Bitcoin, the volatile days, the real outliers, are the really good days. The histogram of daily returns skews positive. So that's good volatility. You want that volatility. And a Bitcoin Treasury company takes that volatility and manages to amplify it. So, our stock, we have 100 to 120 vol. The most volatile stock in the FTSE 250 is about half of that. So we are a volatile stock for the UK markets, but it's good vol also. It's the kind of vol that Bitcoin brings to portfolios, but cranked up. Because that's how it trades. So that comes with the territory. You can't have 100x growth without significant volatility to the downside. And all you can do at that point is remind yourself that the conviction is, of your conviction, and remember that this is about accumulating Bitcoin, increasing Bitcoin per share for the long haul, because of where you think Bitcoin's going 10 years from now, not where it's going 3 months from now. And in light of that, Bitcoin sentiment has always ebbed and flowed, right? So people get really excited about it when it's going up, and then they lose that conviction when it's going down. But it's still the same asset. Bitcoin isn't volatile. It's people who are volatile in reaction to Bitcoin.
I like that explanation. That volatility also gives opportunity, though, does it, to new forms of capital? For example, the convert. What opportunities now open up that the listing gives you?
Well, so in the short term, there's a tremendous amount of things that we can do, because the amount of equity capital that is potentially available to a company that's listed on the London Stock Exchange, is pretty impressive, when you also factor in things like our ATM style facility and the indexes and things like that. But if we're thinking further afield, then there's lots of other things that we may or may not do in the future. What we need to do at the moment is focus on executing to, get the size that we need to get into the company. It may be in the future that we explore things like what Strategy's done with prefs. Metaplanet in Japan's done them. Strive also in the States has done them. They're the 3 companies that have done them so far. The really exciting thing about those products is that you can access capital that wouldn't necessarily be exposed to a very volatile investment. So the reason why we believe that not everyone in the world will own Bitcoin is because for the next, whether it's 5, 10, 15 years, a period of time, you will have that volatility there. And some people don't want that. Yeah. So what Saylor has been able to do in the States is he's been able to say, I will build this product that will pay you 10, 11, whatever % a year. And in return for doing that, I will take the volatility and I will keep whatever I'm left with above that rate that I've guaranteed to pay you forever. So there's a whole host of things that you can do that are built on Bitcoin that are suitable for other people. We often compare it to the internet. So when I started working with the internet, it was obviously something that, some people didn't think had a future. I think we all understand that, it's here to stay. And Bitcoin's like that. We're building our company on the Bitcoin network. We're building our balance sheet on Bitcoin because it's the very best digital capital that there is. And then we can do things with that capital.
Talking about balance sheet, is there a price that Bitcoin drops to that it makes much more sense to take on more debt? Because 76,000 Bitcoin, well, you can probably get debt for 8%.
Probably
so,
less than that.
At what stage? Because there's a bigger responsibility on London Stock Exchange, that you've got your long-term strategy, which is Bitcoin, and you've got your responsibility to your shareholders, which is below a 1x MNAV, buy back stock. But both of those are determined on getting funds, which means you need capital. Is a taking out debt a potential avenue to that?
I think we view it as intelligent use of debt can be a good thing, and you have to pick the right time and the right terms for that debt. That's one of the advantages of a public company. I think most Bitcoin holders would love to take out a personal loan and buy Bitcoin for buy Bitcoin with single-digit cost of capital, and you can't get that as an individual. But as a public company with a solid balance sheet, you can get that, and it's about finding the right times to use that, and then delevering it at times also, so that you can make the most of that lever without getting stuck with whatever debt you've taken on and never delevering. And we're constantly evaluating the right strategies for that and the right timing for that. And now being on the main market, that makes it even better for us to explore those opportunities and ways to prudently put to work a small amount of leverage. At the moment, we have zero debt, and you can argue about what's the right amount of leverage. Maybe it's 0, maybe it's 10%, maybe some people believe that higher would be better. And that's also part of what Michael Saylor has innovated with strategy in the US, is shifting to these preferred equity instruments that allow for higher leverage ratio because the debt covenants aren't there. So it's a lower risk form of debt for the company. So there's a lot we can do now and into the future with those levers. It's
also worth remembering that, if you look at our ATM staff facility, as long as we're selling equity above a 1 MNAV, that can be, accretive as well, because yes, it's not mega accretive in terms of increasing the Bitcoin per share, but it is accretive in terms of getting that scale. Yeah. When you get that scale, you've got other types of debt, for example, the preferreds available to you. So the only thing that we can, almost guarantee to our shareholders is that we'll aim to make the right decisions at the right time. Mm-hmm.
But I think just on the case of the buyback, there was clearly a large seller in the market over the end of December, January, and they had to come out and they had to disclose that they were selling the stock. Now, in that case, would it not have been more prudent at a 0.75 times MNAV for you to be able to just go and bid the seller and buy back the stock and cancel it?
In simple terms, yes. But because we were going under a LSE listing process, we couldn't do that.
Let's say it happened again.
Yeah.
Yeah. So I would say, with my current way of thinking, like a 0.7 MNAV, that's a screaming buy for the company to buy the stock back. And I'm not actually much of a fan of using debt to buy Bitcoin. I'm more of a fan of using debt to buy your stock back. Okay. This is, debt that we can get at the moment, as opposed to preferred debt, which is very different, because that is about using debt to buy Bitcoin, potentially. So yeah, it's and anyone that follows our announcements will see that in advance of then, we actually got the authority. So, should that happen right now, we would have that option, because we've got the authority from our shareholders to buy up to 10% of our equity back. Now, sometimes people say to me, if you're trading at like a 0.98 MNAV, are you going to buy your shares back? Well, you wouldn't bother. The market should be pricing you. Mm-hmm. But if it's an extreme scenario like 0.7, then I would certainly speak to Jesse and see if Jesse supported it, and then we would convene the board and probably get cracking.
Good stuff, gentlemen. Thank you so much for joining me today. It's been great to get an update, and especially such an important time in the company's history as well. Thank you very much. And if I was going to give you a very last question of where is the Bitcoin price going to be at the end of 2026?
Yeah, I'll give you an unsatisfying answer. I think we don't know what Bitcoin's going to do on a short-term horizon, but the longer you look out, the more its properties will win out, and the price, I believe, will go up. So, if people are expecting anything in particular, Bitcoin tends to do the opposite. So I feel like sentiment at the moment is rather bearish, and that tends to happen at or near a bottom. So I wouldn't be surprised if the price of Bitcoin is significantly higher at the end of this year.
And you're talking about funds, flow to funds. So how much is being mined versus how much is being bought? Is there any other metric, lastly, that people should look at as well, such as the cost of electricity, that kind of thing?
Well, sure. The hash rate is important in Bitcoin. That's the amount of computational power supporting the network. And that is a hockey stick chart up and to the right, and will continue to be so. And so, I think that the longer that goes on, the stronger Bitcoin becomes, and it all reinforces the central thesis that Bitcoin is a neutral reserve asset that nobody controls for the digital age, and it is a digital perfection on the properties that make gold attractive. And we think that is here to stay, and we think it's the best asset of the 21st century. And we're going to keep building a balance sheet built on Bitcoin in the way that Strategy has in the US and the way that Metaplanet has in Japan, and we're going to do that in the UK.
And exciting it is to watch. Thank you very much, gents. We'll see you soon.
Thank you.